What keeps the U.S. economy from spiraling out of control? The Federal Reserve. Known as the Fed, it's the central bank of the United States, responsible for managing inflation, employment, and financial stability. But how does it do all that? Through interest rates, money supply, and banking regulations. Stick around as we uncover the Fed's hidden influence on your daily life. The Fed's most powerful tool? Interest rates. When inflation rises, the Fed increases rates to slow down spending. When the economy struggles, it lowers rates to encourage borrowing and investment. This delicate balancing act keeps the economy from overheating or crashing. But how does this affect your mortgage, credit cards, and savings? Let's dive deeper. Ever heard of the money supply? The Fed controls how much money circulates in the economy. Too much money leads to inflation. Too little causes recessions. By buying or selling government bonds, the Fed adjusts liquidity in the financial system. This process, called open market operations, directly impacts your purchasing power. But what happens when the Fed gets it wrong? Inflation is a silent thief, eroding your purchasing power over time. The Fed's job? Keep inflation in check. It sets a target inflation rate, usually around 10%, to ensure stable prices. If inflation spikes, the Fed tightens monetary policy. If deflation looms, it loosens it. But can the Fed always control inflation perfectly? Not quite. Recessions can devastate jobs and businesses. The Fed steps in by lowering interest rates and injecting money into the economy. It also acts as a lender of last resort, preventing financial panic. But can the Fed prevent every recession? Not always. Economic cycles are unpredictable, and sometimes even the Fed's best efforts fall short. So, how does it handle financial crises? During financial crises, the Fed takes drastic action. In 2008, it bailed out banks and cut interest rates to near zero. In 2020, it pumped trillions into the economy to prevent collapse. These moves stabilize markets, but they also raise concerns about long-term consequences. Does the Fed's intervention create more problems than it solves? The Fed doesn't just control money, it regulates banks too. It ensures banks have enough reserves to prevent collapses. Stress tests, capital requirements, and oversight keep the financial system stable. But critics argue that too much regulation stifles growth, while too little invites disaster. So, is the Fed too powerful or not powerful enough? Ever wondered why the stock market reacts to Fed announcements? Investors watch the Fed's every move. When it signals rate hikes, stocks often drop. When it eases policy, markets rally. The Fed's words alone can shift trillions in value. But should one institution have this much influence over markets? The Fed's independence is crucial. It operates separately from the government to avoid political pressure. But some argue it's too secretive and unaccountable. Should elected officials have more control over the Fed, or would that risk economic instability? The debate continues. The Fed's dual mandate? Maximum employment and stable prices. But balancing these goals isn't easy. If it fights inflation too aggressively, jobs suffer. If it prioritizes jobs, inflation can spiral. Striking the right balance is a constant challenge. Can the Fed truly achieve both at the same time? The Fed's decisions impact your daily life more than you think. From mortgage rates to credit card interest, its policies shape your financial future. Understanding how it works helps you make smarter money decisions. But how much control should one institution have over the economy? Some believe the Fed should do more to address wealth inequality. Low interest rates boost stock markets, benefiting the wealthy, while average workers see little change. Should the Fed take a more active role in reducing inequality, or is that beyond its mission? The future of the Fed is uncertain. With rising debt, digital currencies, and global economic shifts, its role may evolve. Will it embrace cryptocurrency regulation? Will it lose influence to global markets? The Fed's next moves could reshape the economy for decades. What do you think? Now that you know how the Fed shapes the economy, what's your take? Should it have more power or less? Drop your thoughts in the comments. And if you found this video insightful, don't forget to like, share, and subscribe for more deep dives into the world of finance.